Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. Today, there is nothing to speak. It was just exactly like yesterday and day before yesterday. Markets opened, went down, recovered. But in fact, today recovery was not as strong as last few days. Because if the recovery is very strong, that recovery is being sold into. So today the recovery was not strong, so there was no selling also. It was surprising. Today is a Nifty weekly expiry, so the market was so silent. The people who sold 22,800, 22,700 put option, 23,000, 23,100 call option, they all made money very, very easily. So it was one of the easiest day for option writers. And today, the broader market outperformed once again, just like yesterday. I thought today our markets will underperform because, the global cues were not good. But despite that, our market performance is really very good. In fact, for the last 4 trading sessions, Nifty neither closed below 22,800 nor closed above 23,000. 22,800 to 23,000. So markets is making a violent move. But if you look at negatively, today, once again, the Nifty closed in red. Out of the last 11 trading sessions, 10 trading sessions, Nifty ended in red. But that is only one part of the story. Today, the entire fall is just mainly because of HDFC Bank and ICICI Bank. Yesterday, the mid-cap and small caps were doing very well. And pharma stocks, as a collateral damage, TCS and Infosys, they both fell. That dragged the market down. And today, what happened? Same way, when mid-caps and small caps are doing well, and, HDFC Bank and ICICI Bank. So today, HDFC Bank fell 2.5%. That's really very big. In fact, today, Nifty is down only by 15-20 points, but HDFC Bank and ICICI Bank alone contributed for 90-point fall in Nifty. So if not for these two stocks, Nifty would have closed about 70 points higher. And Bank Nifty is even worse. Yesterday, the Nifty fell, but Bank Nifty was higher. Today, HDFC Bank alone contributed for more than 300 points fall in Bank Nifty, whereas the Bank Nifty fell only 250 points. So you take out HDFC Bank, the Bank Nifty was in green. And not only that, HDFC Bank and ICICI Bank together, they contributed for about 500 point fall in Bank Nifty, whereas the Bank Nifty is down only 250 points. So if you look at the nitty-gritties, if you leave this HDFC Bank and ICICI Bank, the overall market was good. So now we have 4 more trading sessions for this monthly expiry, because there is one day, next Wednesday is a holiday, a Mahashivaratri holiday. So we have only 4 days. And what people are doing, we only have 4 days. The market is just consolidating, not closing below 22,800, not closing above 23,000. So people are taking 23,000 short straddle. 23,000 short straddle, it was trading around 300 to 350 points. So that means upper break even will be 23,350. Yeah, that's given because I told you, even if the 23,000 is crossed, 23,300 will be a good resistance, because, that's a 50% Fibonacci retracement of the last 1,000 point fall. At the same time, downside is 20 to 650. That's also relatively safe, because, every time market going to 20 to 800, the markets are, bouncing back. So people are taking 23,000 short straddle because, they have only 4 trading sessions, a time value will help them, right? And people who are conservative, they're selling 23,200 call, 23,300 call, 22,500 put, So broadly speaking, 22,500 to 23,500 may be the range for the next 4 days. There are no important events globally also, locally also. the markets will find its own direction. Maybe if any new direction breakout or breakdown, I think we can expect only in the month of March. Moreover, this February, October, November, December, January, 4 months Nifty closed negative. It looks like February also, it will be closing in negative. So it will be making a record, in the history of Indian stock market. So probably people say this has happened in 1995. But why to compare 1995? 1995 is totally different. Right? At least after 2000, in the last 25 years, so this has not happened, but that is most likely to happen. So, the people have been saying, mid cap and small cap froth is still there, but large caps, likely to outperform. But what is happening for the last 2 trading sessions, mid caps and small caps are outperforming, large caps are dragging the market down. So FII data is still not out, right? So there is no need to say FIIs will be a seller only. But otherwise, why the market has to fall in the morning? So anyway, we'll see, because today is expiry, so there's nothing to worry. We will see tomorrow how to take positions. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.